Hello and welcome everyone. Today I wanted to go over a feature that I added to the website probably a month or so ago that I had started using, and it is Iron Condor suggestions, and also the tracking in the website to track your overall profit or your overall gain or loss. So let's get to it. So here we are on the website myatmm.com, and what we want to do is right now it's setting on the dashboard after you just log in. We want to go over to the page Iron Condor Suggestions. So click on that. It'll load up the suggestions for us. And right now there's 923 of these suggestions. This fluctuates daily. During the stock trading day anyway, Monday through Friday typically. And so this number will fluctuate. It might be 800 one day, might be 900 another day, whatever. It fluctuates quite a bit. And I will say it's only looking out like the next 2 weeks, or I should say, yeah, about the next 2 weeks, next 14 days is what it's looking for. And the stocks that are part of this list, the ones that it's analyzing Iron Condor possibilities on, are all of the stocks that you've added to the covered call web page. And the funny thing about it is it's not just the covered call stocks that you've added, it's actually out of our entire pool of stocks. I think I've put like all of the ETFs and all of the weekly options based from CBOE's website. I've put all of the stock symbols and ETF symbols that trade weekly options because, again, we focus on weekly options here. So, all right, the Iron Condor suggestions page. Here's just some rule of thumbs just to confirm, to make sure that these are, good to go for you. These are, again, just suggestions. I would not blanketly just trade any of these. This tool was created just to try and find the highest probability strategy or the highest probability trades that you could make. And these things fluctuate quite a bit. So again, it just kind of gives you a good starting point for suggestions, and you would basically take every suggestion and then go plug it in to your brokerage account, in which I will go ahead and we'll basically filter this down so I can show you how the filtering works. And also we'll pick one or two, probably just one, to go and simulate and show you in the trading platform. I'll use TastyWorks to do it because that seems to be the best one for options, especially trading on Iron Condors and visualizing what we're doing here. And then furthermore, past that, I'll also take you into the web application, or, again, this site over to the cost basis, so I can show you how to actually track an Iron Condor and the features that are possible there, because it's not just the initial trade that it'll track, because over the course of the life of a Iron Condor, you might need to adjust it or, bring a leg in depending on if a stock is moving out of the range or not. So the cost basis is built to where you can roll those and still track your initial transactions and the ongoing transactions, so you can get an overall point of view of whether or not you've lost or made money on the Iron Condor over several, as many rolls as you want. So let's stick to the filtering and the suggestion list. All right, so in here, initially it's just showing all of the columns by strikes. And what I'm going to do, because this is pretty data intensive, so it can fill up the screen's width, I'm going to go ahead and collapse this menu by clicking those three little buttons. So now we get more width here. And you can see the display type. You can show volume only, the spread only, or the strikes only. I'm going to choose all columns so I can show you everything, and it's going to be a data overload for sure. So strike all the columns. So now we got all of the columns in here. We have, you can see the puts, the volume, the spread, and all the information. So what we want to do, and I'll just show you like one of my favorite searches to do. All right, so the expirations, it'll show you all of the upcoming expirations, like for the next 14 days, and it looks like it may go out a little bit further than that because I'm seeing an April 21st here. All right, so let's not focus on that. If you did have a specific stock you were looking for, you can actually just enter it right here, like MSFT, or we can do Apple, and SPY is even in here, and just enter those three, hit enter, and it'll filter down to just those. And you can tell that the record count went down to 8. It was like 900 something before, so you can see the filtering did work. So, and I think you can even sort this. Yep, you can sort it by the column, so you can see what's what here, and then you can even focus down to a specific expiration. And I'll just do February 24th, so you can drill down to exactly what you're looking for. And the reason why this thing was on the strikes only screen is because this is the easiest way to go in there, and when you're placing iron condor, you can easily say the buy put, sell put, and then the sell call and buy call. So makes it really easy. Okay, in here, you know, typically you like iron condors to be very liquid, so you can have a minimum volume filter here. You can also do a max spread, and the max spread, what that is there's a, let's see here, I'll do the spread only. Okay, so the spread is the difference between the bid and ask. So the spread is showing you what that spread difference is. So the buy put spread for this specific one is only 2 cents apart from the bid and ask. But the sell put spread, that's a 17 cents difference. So that may make a difference to you or not. So this is a way to say, I only want to see iron condor suggestions that only have a spread of like a nickel. I don't want to see the ones that have like 50-cent spreads, because I don't want to mess with those. It's just personal preference. All right, and minimum collateral, this is the amount of collateral that you'd have to put up to do the trade. You can actually have a minimum collateral and a max collateral. So if you only wanted to focus on, so let me undo some of these. I'll do all, and then I'll take off that filter. And then say I only want to focus on collateral that's going to be, I don't want to deal with any iron condor that's going to be more than $500 collateral commitment. So I can filter down to those. So there's actually 890 of them. So there's still quite a few. The cool thing about it is you can actually sort by this. So you can see all the $50 ones first, if that's what you want to focus on. And then the profit versus collateral, that's the amount of profit that you can perceivably make versus the collateral that you have to put up. And it'll show you a percentage range, so you can actually sort by that column too, so you can find the biggest ones that you want. So this one looks like you could possibly get $220 profit off of just a $500 risk. And again, these numbers change quite a bit. I mean, sometimes they're spot on depending on what time of the day you do this at. And some of the time, you know, the stock's moved, so they're not quite right. But it definitely gives you a great starting point to go when you're doing these. All right, now that I've kind of given you a brief overview. So yeah, this minimum profit percentage, this is filtering off this one. So say you only want to see ones that have a minimum profit percentage of 20%. You don't want to mess with anything that has less than 20% because you don't care to even fool with that. You just want to focus on the 20% or greater one. So you can see there's 306 of those using the rest of these filters. So let me get rid of all of the filters except for the percentage. So now all of the filters are off. So the only one that's looking at is 20%. How many? So we had 923, and for 20%, there's 308 of those. All right, so here's the 308. All right, moving on, something now. In range. What the in range means is you'll see how this is green and red, so this profit is changing from green to red. The green ones are the ones that are in range, and what I mean by in range is this is something special that I just did. Every stock has a weekly average trading range. So the stock symbol RAIN for the past year, this is only the past 12 months, so for the past 12 months, it has averaged a weekly move of $21.35. So what that means is when I say a stock is in range, what it means is it took the last trading price, which is $7.57, and it subtracted $21.35 and it added $21.35, and that gave us a range, and that range was $65 from the high to the low based off the last trading price. So that's a $65 range, and it makes up 33% of that range. And what I mean by that is the weekly average makes up 33% of the full range. And why that's important is because let's just try and give a demo or show you an example of what I mean by that. So let's sort this by range. So yeah, so see how this is 272% of the range. What that means is 816 here. Well, it looks like, see, that's a small number, so that's probably why this is so bogus, because it could only hit 0 in that, so it only said there's a $3 range. So 816 is 272% of the $3. So that's what that's talking about. So obviously these are horrible candidates for iron condors, but that's why I got all this information in here. And the proposed profit was still $10. So apparently, when you still play the numbers, what it's doing is it's basically finding the deltas that are 0.15 or below on both sides, the call and the put sides, and it's finding two spreads equidistant from there, and it's determining what the profit is. And the only ones that are showing up in here are the ones that have profits, or I should say have pairs, meaning they have the call and the put side pairs both existing for any given stock. So those are the suggestions that show up in here. All right. And furthermore, you can sort this for the reverse order, and this $1.52 weekly average is only 9% of the full trading range. And this is important because if on average this stock only moves $1.52 and your range is $16, meaning it's going to have a significant week to move outside of this range and make this a not profitable iron condor, possibly. So that's why I created this filter for in range. I guess it's kind of proprietary filtering. It's just my custom filtering that I've added to this thing. Also, if you wanted to filter down to just dealing with stocks that are in the S&P 500, you can hit this S&P 500. It'll filter all of these down to just S&P 500 stocks. Furthermore, I also have an aristocrat and what is it? Aristocrat and King, yeah. Aristocrat and King dividend stocks if you wanted to focus just on those. So if you had the S&P 500 and this, it would filter down to just the ones that are collectively both. So there's 56 of these. If I took the S&P 500 off, okay, there's still only 56. Sometimes, not all the Kings or whatever are part of the S&P 500, so there might be a few that are outside of that realm. But anyway, this gives you the ability to filter on both or one or the other or whatever you want to do. All right. So what I was going to say is something that I like to focus on. Aristocrats, I don't know if it's like by and large the fact this, but sometimes their volatility is a lot lower, meaning they're not going to move as much, and that's a pretty important thing in trading iron condors. You don't want the stock to move all over the place. So, all right, one of my favorite searches to do on this thing is to hit all three of these guys, and I like to hit 20% or more, and then I like to just focus on these guys. So 20%, there's only 13 of these to focus on, and this is doing spread only. Let me do the strikes only. All right, and then I like to sort by the profit versus collateral. Actually, I want to see what's the most risk that I have to. Okay, see, so the most risk for these is only $250, so I don't have to do any filtering by the collateral or anything. All right, so if I sorted by these and I wanted to focus on just this top one, it says $27 profit for XOM. That's Chevron, I believe. All right, so what we want to do is I'm going to take this one and go over to TastyWorks and show you what a simulated trade would look like. All right, so here we are in TastyWorks, and we're looking at XOM, and the expiration for this suggestion was February 24th, so that's actually 2 weeks out. And to each their own, you know, typically I only like focusing on the next upcoming week's expiration, but so this is on the 24th, and it's an iron condor. I like starting off with their default template, and I just know that this, I like to, let's see what the site said. So the buy put is at 112, which is right there, 0.15, and the sell put is at 113, which is right here. And I will say that's sometimes a little outside of the realm of what I like. I usually like being even lower than that. But let me stick to just what the suggestion said, just for this demo overview point of view. All right, the sell call is at 125 from the site, which is right here, and the buy call is at 126. It's right here. All right, and you can see that the proposed profit is $28, and the proposed profit from our site was $27. And let me move this to the numbers that I usually like. And this is why you use the website as a starting point, because sometimes it doesn't get it just right to what you're looking for. And you might just be looking outside of one standard deviation, which is what this dotted line is representing. And if I was just to go outside just the standard deviation, then we're still setting a $23 credit. And this is only a $100 collateral commitment, so the buying power effect. So it's actually the max loss is only $77 on this one. So anyway, yeah, that kind of gives you a point of view of what this is doing. And what I also want to do furthermore is I want to show you how to track this in the website. So let me go show you that. All right, so here we are on the website, and let me go ahead and get this menu back. We want to go over to the cost basis, and let's see if I can just plug this in. All right, let me add this real quick. And I think this account has the ability to add one. I don't remember. Let me click save. Okay, so that's saved real quick. Let me go in and out of it because I want all the information to update. All right, so XOM. All right. So what we need to do to track this is over here on the positions play. Most of the time I just hit new position, but I did build this iron condor position. So hit new position, and now we get a template to fill out for this iron condor that we were proposing to do. So the expiration, it'll pick the next Friday out, which is the 17th. But this one, if you remember correctly, was actually for the 24th. We're only doing one contract. All right, so the strikes were 112, and we were going to get, it looked like 56 for that. Yeah, I'm just going to stick with the bottom numbers. 113 was the next one, 0.71 for that one. And then the next was 126 strike, and it's 0.29. The other one is 127.23. And okay, so in here we're coming up with a $21 total credit. And that's because I picked the bid prices on all these, and I ultimately you need to pick like the mark, the mid in between them. And I did not do that. But in any case, you can kind of see how this is playing out. So anyway, you fill all that out, and then you click save. And that'll put it down in the custom strategy down here. And you can see your overall profit so far is 0. The reason why that's showing up as 0 is because these have not been saved yet. So let me go ahead and move those down one at a time. Click save. I'm not going to worry about commissions and fees because this is just a demo. So I moved all 4 of those down. So now all 4 of those transactions are retained. And now you can see in here, our net credit was 21, collateral was 100 that we put up. Our overall profit so far is $21 in this trade. All right. So as time goes on, as you know, if you've traded iron condors, you know the stock price could set in the middle, which is great because that's where you want it to sit, or it could start approaching the call, or it could start approaching the put side. And then when and if it does close on the other side of this, so say, let's see, we're setting on the puts here. So say it started approaching 113, the tank started going down, it started approaching 113, and it happened to close at 112.75 or something like that. So it's looking like it might not expire worthless. It might expire in this range. So an adjustment you can do is to pull your call side down to it to meet it, to kind of reclaim some of the or mitigate some of the losses that you may or may not experience during this trade. All right, so something you might want to do is you would roll both of these. You'd roll both of them. So this 126, I don't know. We're going to make up some numbers here. So we bought it at 29. Let's say we had to buy it back for, it's probably not worth very much now because the stock prices dropped down in this example, this fictitious example. So say we could buy it back for 5, a nickel. So say we bought it back for 5. We're selling to open another call because we're basically just rolling it down. And it's going to be the same expiration. So what we're doing is we're rolling it down. So this is the 126. We're rolling the 126 down to 113 to match the top end of our put from this second row up here. And the roll price we're getting for it, we'll just say is, say we're getting, I don't know, it's probably high, depending on when the expiration was. I'm just trying to guess, not a number. We'll just say 25. But something to keep in mind. Okay, I know what to do. Hold on. So let's say we're going to get 50 for that, which is quite a bit. All right. So this side, so say we can sell that one for, if we sold that one for a nickel, the one above it's probably worth less. So we'll just say 3, I guess. All right. And the roll price, oh, yeah, I forgot to pick the sides. That's bad. Okay, so this is going to be a buy to open. This is going to be a call. All right, so the sell needs to be higher than the buy. All right, the strike on this one would be $1 more, which would be 114. And, all right, let me see. What's the roll price? Just thinking out loud here. This needs to be less than the other one because, all right, we're just going to say we're going to get... I'll just do 35, so that means we're like making 15 bucks to roll this down. All right, so what we want to do is we want to click submit here and submit there. Oh yeah, I didn't pick the expiration. My bad. All right, click submit. All right. So what we have here is we need to track the buy transaction or the closeout transactions. And let me see here. All right, yeah, to close the positions, we need to track that 5, and we need to track the 3. And this is easier as it's ongoing because you won't have all the rest of these transactions. It won't be as cluttered up. And we need to close out, get rid of this one, and get rid of that one. All right, and then we need to track these 2 transactions. So that's the 50 and the 35. So the 50 is right here, we track that, and then 35, track that. All right, so after all of that confusion, so to speak, iron condors are a lot of transactions to track, which makes it tracking them manually probably even more difficult than this. All right, so now we can see our overall total is $34. So we've banked $34 on this now instead of the 20 that we originally started out with. So anyway, this is just a cool way to show you the strikes, how many days to expiration, and what you've collected overall so far, so you can see what the total loss might be or the total gain might be. So anyway, that's all I wanted to show you with this Iron Condor suggestions and tracking video. I want to thank you for watching. Like and subscribe if you haven't already, and go out today and get your free account at myatmm.com. Thanks, and I will talk to you in the next one.